Welcome to Matters Financial and Geopolitical from a Frontier. Thank you as always for stopping by. I hope you had a great weekend. Let's go to the currency market. Euro dollar 111.61, dollar index 97.95, Japanese yen 110.03, Swiss franc 101.04, the pound 127.51. The Australian dollar's had a big pop higher, 0.6924. India rupee, that's improved, 69.5725. South Korean won, slack, 1193.99. The rial, 440 target, 410 now. Egyptian pound, 1706.05, and the rand, 1440.71. Dollar index, I've been bullish a very long time. This is a chart from Simple Trends, who's similarly bullish. Euro dollar, this chart is from T Commodity, last 111.61. Tesla sank to a 2-year low after Elon Musk told employees the company will be scrutinizing every dollar it spends in a hardcore focus on costs. It's now down 34% year to date. The Bitcoin Chinese renminbi correlation that the world has been spinning is similar to the Bitcoin avocado correlation, Kruger macro. And this is the theory that we're watching flight money out of China drive up the price of Bitcoin. It crossed 8,000, but we're back at 7,865. Commodity markets, crude oil futures in New York rose as much as 1.7%, following a 1.8% gain last week. WTI rose as much as $1.05 to $63.81 a barrel. The contract expires after trading Tuesday. Brent rose $1.02 to $73.23. This is all on concerns about Iran and this Trump tweet that's gone out that he'll wipe the floor off them. Crude oil, this is a 6-month chart, $63.56. Lower prices for exported agricultural commodities like soybeans. Soybeans are the bleeding edge of the tariff war vis-a-vis America. The stock market and the farm economy are his Achilles heel, but so far he's proven very smart at massaging and strumming the New York Stock Exchange and the NASDAQ. But the farm economy, in my view, is at the extreme end of the US collateral damage continuum. Emerging markets, I take you back to May 2018 when I said this has all the ingredients for baking a good old-fashioned crisis. Veteran lawyer says emerging market debt is headed for trouble, now retired from Cleary. Pittsburgh native has a frightening prognosis for the coming decade. He foresees the biggest string of defaults since the early 80s. He blames the rise of bullet bonds, non-callable debt instruments that pay back the entire principal at the final maturity date. Talking about getting involved in the Philippines, Marcos was in power. He watched Cory Aquino's rise to power. That was quite exhilarating. Iraqi leader Saddam Hussein was overthrown. People who've been suffering under some regime assume that once the son of a bitch is gone, everything will get better right away. Of course, the higher those expectations, the more painful it is when they crash down. No government, how well-intentioned, can cure all the ills in a society. Talking about bullet bonds, a characteristic of sovereign finance, people who borrow are really the ones who pay it back. Then you have the dubious tension when there's a government in place in a great crisis. The opposition wants to see the government fall on its face. A finance minister from an African country once came to me before defaulting. This was a preemptive restructuring. When I finished meeting with him, I said, let me express my admiration for dealing with a problem that's inevitable, but you're doing it earlier. And he said, son, We don't have an election for another 8 months. Don't you think if I could hand this bag of garbage to the next administration, I would do it? But we won't last 8 months, he said. So another bout of emerging market sovereign debt problems may be in the offing. Interest rates have come up from the historic lows. QE programs are being wound down. The commodity boom is well off its highs. A lot of debt, both corporate and sovereign, was put on the books during the sunny days. I previously said I'm keen on buying the China emerging market negative feedback contagion loop. To wit, emerging currencies have erased all of this year's gains against the dollar and are down almost 4.5% since late March. Brazilian real, biggest weekly rise since August. It has only had 4 bigger weekly gains since Brazil emerged from the 2015-2016 recession. I wrote at the end of the year, strong dollar is the equivalent of administering a caning when it comes to emerging and frontier markets, and that therefore the direction of the dollar is pivotal.